Chris from NEMRC, Vice President of NEMRC, Grand Listers, what I was hired for. So, today we're going to talk about how to keep track of your grand list, how it ties to your taxes, and how to reconcile your local data that you guys are creating from your grand list to printing tax bills to the treasurers, and how that ties all the way up to the state of Vermont equalization study. Okay? Or not, I'm sorry, I didn't mean to say equalization study. Cash flow statement, where they calculate how much you either receive or send to the school. Okay? So, the first thing I want you to know, right here. This is all we're doing. Right there. And this is how technical this gets. You can't hear this, but it's Jed telling Granny, listen to how the boy ciphers. What do you want me to do? My gazintas or my knots? Right? One goes into one time. This is how technical this gets. Alright? This reconciliation process, as I take you through it, you're going to be like, that's all it is? When we strip off all the layers of onion that we're going to look at here and just take it piece by piece, all we're doing is keeping track of our values from point A to point B to C, D to E, so on and so forth. But many of us don't do that. We just sit there and say, here's the number we're starting with, here's the number we're ending with, and nobody really paid attention to what happened in between until someone like an auditor comes in our office and says, why are these different? Then we start to freak out a little bit and say, oh, well, because I made changes. But auditors are funny people. They're like, what changes? And when somebody starts needling you or putting the thumb on you a little bit, that's when we get nervous and we're like, well, did we do it right? I'm going to show you how to make sure that how to keep track of this stuff. And it's nothing more than what Jethro's doing here, your gazintas. All right, so I think the first thing I want to talk about, if you look at this handout, is this first flow chart. And I struggle with this flow chart, especially with new listers, Patty. New listers, and how to explain the grand list life cycle. Because the grand list is a funny thing. Because at some points in time of the year, you're keeping track of two grand lists for two very different reasons. And I'm trying to spell that out in this first handout right here. And I will bring up, I'm not a real big PowerPoint person, but I'll bring this up here. Slideshow, correct slide, right here. So I want you to envision ourselves, it's a brand new town. It's the town of Todd. It's a new charter in the state of Vermont. Well, the first year, we got to figure out how many parcels are in the town of Todd, right? And then we have to figure out how much are those worth. Because in the town of Todd, we like stuff. We want street lights, we want snow plowing, we want a town clerk, we want a treasurer, and we got to pay for that stuff. So in year one, we pick a starting point and an ending point. And the state of Vermont said, our starting point is going to be April 2nd of a given year. And in this case, I started in 2020. And we're going to go out through the town of Todd and appraise everything. And when we get to April 1st of 2021, we're going to say, good, this is what we want to tax you on. Make sense? Then we're going to go through our grievance hearings. I didn't write down every little nickel and dime thing. We're going to do our grievance hearings. And we're going to file a grand list with the town clerk. And that's what we're going to use to set tax rates, tax bills out on. In July, We're going to make a new as-built grand list. Once we make that as-built grand list, this is the tricky part for me to explain to somebody, especially on the phone. We have to maintain this grand list from now until December 31st for everything that happens from July to December 31st. Like homestead declarations, current use changes, right? But we also have to go back to our working grand list and start appraising things that happened April 2nd of 21. We got to catch up from the April 2nd to June 30. And then we have to keep making more changes for 2022. And we do the same thing. We make our new as-built grand list so we can send out tax bills and get money to pay for stuff for the town of Todd. And then we got to get ready for number 3 here, for year number 3. Does that make sense?
No.
That's a tricky thing, especially to put on paper. But if you, after this point in July, you have to remember you're maintaining 2 grand lists. Used to be, back in the day, there was only 1 grand list. It was your municipal grand list. Enlisters would send out tax bills, and unless there was an oddball thing, I mean, we're talking back in the day, Sandra Groda days, right? So, all we did, we sent out our tax bills. The listers wouldn't come back into the office until February of 22 to do their transfers and their new parcels. But that's been gone since 1997. So, keep this part in mind. Now, when we're talking about reconciling, the second flow chart, now that we've got this flow chart ready, right? This flow chart ties in the education in what Terry Gildersleeve does at PB&R, right? There's rules we have to abide by. So, at the local level, we have to build our grand list, okay? And August 15th, PBR wants a copy of that information. So out in here, we've sent out tax bills. Most people have sent out tax bills. The state of Vermont wants a copy of that data. Why do they want a copy of it? Because they want to take what you have at that point in time, submit it to the agency of ed, where they will calculate your estimated education taxes, how much you're going to send to the school, or how much you're going to receive, okay? So August 15th is just an estimate, and they report that back to your treasurer. You continue on working on your grand list till December 31st. In between January 1st and January 15th, Terry's back on the phone saying, get this grand list submitted because I've got to get it over to the agency of ed so they can calculate your final cash flow statement after all of these little adjustments you made between this date and December 31st, okay? The important thing for you as listers is to make sure what you submit to Terry is what they receive, okay? And what those are the same grand list numbers that they're sending over to the agency of ed, all right? Because once Terry sends it over to the agency of ed, right, wrong, or indifferent, that's the number you're going to be on the hook for. And the only way to get that corrected is to ask for a legislative change, okay? So that last 411 you send to the state is very important, all right? So, if we flip to the next page, you'll see in my test town that I'm using today, I'm going to show you more stuff so we don't have to do as much on the handout. So right here, town of Cavendish. I am going to show you how we reconciled their cash flow statement here today. But they submitted their final 411 to the state of Vermont January 19th, 2023. You can see my head scratching in the upper left corner. Okay? And they said if you look down at the bottom of your 411, our municipal grand list reads $2,659,749, Homestead Ed, $786,163, and $1,864,37 down at the bottom. Those are the numbers we gave to Terry. Terry's taking those numbers and giving them to the agency of Ed. If you turn 2 pages, I got 2 pages stuck together. I think you are on a tax book page.
Yep.
Tax book summary?
Yep.
Tax book summary. If you look the 3rd line, 1, 2, 3, 4 lines from the bottom, it says total tax. See it?
Yep.
Yep. This is a handout.
Based on the grand list number that you gave on the page before, right there. Yep. Times your tax rates, this is how much taxes you're going to raise. Okay? So based on what the listers did for their appraisal work, current use exemptions, veterans exemptions from the 411, that information applied to the tax rates raises this much taxes. Make sense? I don't hear anyone saying it makes
Yes.
sense.
Yes.
Yes.
Okay, what you got? 411.
So this is new to me.
Yeah,
So
that's right.
non-homestead at 1.85
Yep.
4 million.
I don't want you to focus on that yet.
Okay.
These 411 numbers,
Yep.
okay, will be used to calculate this total tax,
Yep.
okay? Now, I will call it out. What he is observing is these grand list numbers
Yep.
here aren't the same as what they're on, as you see on the 411. And the reason for that is this is how much tax I'm going to send to people, okay? The 411 is telling me my grand list values to figure out a tax rate, okay? But over here, because we have things called the local agreement rate, non-approved contracts and veterans, that's why your grand list numbers on this tax book is not the same as on the bottom of your 411. And if you do the math, you'll find it's your non-approved contracts and your veterans exemptions, okay? Because we're making them up in that 3rd line down for tax rates. So the gist of it is, your 411 numbers drive what we're going to tax, okay? What we're going to raise for taxes, all right? Now, that one is going to come to this scary report, which is the next one. And I'm actually going to open up a grand list so you can see. Open up this grand list. Because this one, if I get a call, it's on this. And people freak out. Well, come on. I didn't type it right that time either. There we go. All right. This is where people freak out. In the fall, the state of Vermont wants your Form 427. Your Form 427, as you see on that next page, is just a little questionnaire. I'm just going to type in anybody's name here and get it up on the screen. Missing tax rate for additional tax. Oh, I got to type in the whole word number.
The rate, the tax rate.
Yeah,
Tax rate are all 0.
that's right. This section, does my municipality have any other taxes that are billed outside of my town, outside of the town office? Meaning, do they have a village? Does anybody here have a village? What town? What?
Bristol.
Bristol. Good. So, that village tax, is it billed out with your municipal taxes, or is it done somewhere else in town? It's all on one tax bill, okay? So, they want to know, does that tax rate, what is that tax rate? They want you to fill that in. But if you are like most of you that don't have a village, the state of Vermont wants you just to type in the word none in all uppercase, so it doesn't show up. And this is your 427. And the reason why I say people get freaked out about it is Terry's going to call up. I'm just picking on Terry. Someone from the state's going to call up and say, we haven't received your 427. Can you send it? And the treasurer is going to call the lister's office and say, oh my God, the state said you need to send a 427. And the listers were like, what's a 427? And what's that got to do with me? Well, it's just a list of the tax rates that were used in your as-billed grand list. And because it lives in the grand list, the treasurer's thinking, oh, this has got to be a lister thing.
Yeah.
Yep, I'm calling up the lister, make them send it. And the listers look at it and it's like, zoinks! It's tax rates. I'm not signing off on this. This is a treasurer thing. So now we got two people freaked out. Neither one wants to talk to the other one, and no one's sending Terry the 427. It's not a big deal. It's just a listing. It tells the state of Vermont how many installments do you have in your town, how you calculate the installments, and if you use districts or variable tax rates, and what your municipal rates, your homestead rates, and other municipal rates are. That's all it is. They use this information to help calculate your current use hold harmless payments, okay? They used to do it by paper and have you fill it out. We just built it into the software. That's all that is. But that's why this information in your as-billed grand list, your 411, that tax book summary, and your 427 are important, all right? And this is how they're being used out in the world. When you turn to the next page, page 8, that's where we get to this evil-looking form. This is your town's cash flow statement from the Agency of Education. Okay? It's a little intimidating. But this information is the exact information you submitted on that final, on the August 15th 411 and January 1st 411. Okay? And we're going to reconcile these numbers. But before we get into the reconciliation process, I want you to, you can tear these apart because the print is real small. So what I did is I defined everything, what each of the rows are on the next two pages. This is just some typical, at the very top, some basic education information. It doesn't really apply to our 411. It's about per pupil spending and whatnot. But where it hits, where the rubber meets the road is down here in row 6. Row 6 is your homestead education. Your homestead education grand list, which, guess what, came from your 411 earlier in this document. All right? It's literally that. This number on page 2 or 3. And go ahead and take this thing apart and lay them side by side, if you'd like. So you don't have to put them and flip back and forth. So this number that we submitted August 15th, and then a final one, January 15th, landed right in row number 6 on this form. Okay? Rocket science, right? Good. When you look at the next row, row number 7, homestead ed tax rate. On this form, my homestead ed tax rate for the town of Cavendish was $1.5077, which is the same rate that I typed in on my tax book. Make sense? Number 8, homestead education liability. A fancy way of saying, take your homestead ed grand list, multiply it times the tax rate, this is how much money it would raise. Make sense? I know it's math and people are usually pretty quiet with math, I am, but this isn't rocket science, right? So this number of 1,185,289 is identified on the treasurer's tax book when she printed tax bills. I'm going to mess with him a little more. Now, when you look at that page and you look at the homestead ed row, it only comes up to 1,181,679.41. That's not the number I have here. Okay? And the reason it's not, and it's explained in the definitions, is because the town has this local agreement rate. How many people understand what the local agreement rate is here? 2, 3, 4, 5, good. So many of us don't. So the local agreement rate is this. I want you to think of this table goes to lunch, okay? You go to lunch, and the bill comes to $90. 90, yes. How much will each one of these people chip in to pay the waiter? $30 a piece, right? 90 divided by 3, right? 30, 30, and 30. Good. You two decide, because it's Sandra's birthday, Sandra, you do not need to pay for lunch.
And it will be a big one.
It is. Well,
She got the steak.
oh, 80. All right. So, she's not going to pay. She gets up and leaves. Okay? Can you two leave $60 for the waiter? No. He wants 90. So you guys are going to chip in an extra $15 a piece, right? To make up for her not chipping in. Okay? That's what the local agreement rate is. The state of Vermont on the cash flow statement said, this is your homestead ed grand list, times this tax rate, I want this amount of money. Okay? But in reality, in your town, you have offered some people some special exemptions. Veterans exemptions beyond 40,000. The education department says we only accept the first 10,000. You want to put the additional on? You guys in your town make it up. You voted to exempt Walmart from paying taxes because you wanted them to move to your town. That's fine. But the state still wants their money that Walmart would have chipped in. They don't care where it comes from. So instead of Walmart writing a check, all of us are going to chip in for Walmart. So part of this education money here, that 1 million, what you see on here, 1,181,679.41. Some of this 1,185,289 is in the local agreement rate. So you have to add the two pieces together. Then you come up to the whole. Does that make sense? Patty?
Add what two pieces together?
What?
Add what two pieces together? You
I-
add what two pieces together?
You have to add the local agreement rate back into your homestead ed rate,
Okay.
okay? To get up to the same number that the state, remember, the state, the agency ed's just the waiter. You guys owe me $90, but these two guys made an agreement with Sandra. You don't have to pay Sandra, that's okay. So now, these guys are gonna put on the table $30 and $30 to pay for themselves, and then they're like, oh yeah, we gotta put another 15 bills in for each of us. So when you add it all together, it comes up to the full 90. Does that make sense? Good. All right, so, whew, we did all three of these right here.
One thing, with the voter exceptions, one has to remember that to look up and check every year to see when those voter exemptions need to be voted again.
That's right. So part of your grand list review, when you reflect back to that first flow chart, when you get to setting up your grand list in June, you want to review any voted exemptions because they have to be revoted every few years. And if something expired or is going to expire in 2024, you need to bring it to your town clerk so they can put it on the warning so that at town meeting, your town remembers to revote. Do we want to do this again? Yes or no?
It's 5 years.
It depends. They're not all 5. It depends on the town and what they want to sign up for. So you've got to look at those reports. So, let's go to the state payment section, 9, 10, and 11. Total state payment. Everybody's aware of the state payments that we download into our grand list, correct? That's all that number is. When you download the state payments, and how many listers here download the state payments? Okay. The others, I'm going to guess that the treasurer does that piece. But when the treasurer gets this cash flow statement, she should be able to look at the state payment report, download it into NEMRC, and they should total up to this number. Okay? That's all. And if you look on your tax book, you can see the state payments are listed down below. Okay? Then those state payments are broken out, portion to the municipal side of the grand list, or taxes, and a portion to the education side. Okay? That's it. Nothing scary yet, right? Yeah, right. All right. So let me scroll down a little bit so I can bring the next section up. Whoop, right there. All right. Now we're getting into it. Right here, line 12. It's basically, no, it's not basically, it is. The taxes that we, based on our tax rate, how much it's going to raise, minus the state payments, equals this number. That's all. Nothing real scary here. Late fee retained, right here. When someone files their state payment after April 18th, I think this year, they are subject to a $15 penalty. So, if my state payment, watch this math, Bob, this is going to be good, right off my head. Ready? Yep. If your state payment's $115, okay? $15 of that penalty for you filing your homestead deck and HI 144 form late, $15 goes to the town as a penalty. The town gets to keep that. The other $100 gets applied to your tax bill. okay? That's statute. The statute says that's what this $165 roll is. Late fee retained by the municipality of all these state payments, $165 worth are the penalty that the town gets to keep. Which would, if you know it's $15, how many parcels did we have that were late? 11. Look at you doing your gazintas. Yeah, 11. So 11 people out of all our parcels that got a state payment filed late. Good. Town can use that money any way they want. It's how we as municipalities get paid for printing revised tax bills and doing extra work. Okay? Now, amount raised on homestead properties. I believe, and I gotta remember where that number was. Oh, I'm sorry, did I jump? Line 12 and 14, yeah. So then it's this amount minus the 165. Gets you down to here. All right. Then probably the next piece, right here, line 16, right there. I don't remember off the top of my head why it's 0.225 of 1% of the homestead liability is retained by the municipality. Okay? So, this is more money that the town gets to keep. And the 0.225, I don't remember why it was set at 22 cents, 22 and a half cents. Brad James from the Agency of Ed told me in my younger days. I'm 53. I don't remember. They said this was going to happen, and it's happening. So, but the algorithm, and if you look at that description column, I spell out that row, and you can see the math of it on line 16. Okay, if you look at that column. But it's simple math. Okay, it's all spelled out. Then we come down to 21, homestead ed tax liability, and then the subtotals. So it's just basically doing the math from above. Then we got to do it all over again for the non-homestead ed tax. We just broke down the homestead, so I'm not going to go through each line of the non-homestead because it's the same exact thing. We're just doing it again for the non-homestead. And then down at the bottom is the summary. I'll zoom out a little bit. Okay. Homestead taxes to Green Mountain Union High School, non-homestead taxes to Green Mountain High School. $3,687,000, yada yada yada. That's it. Those are the three pieces, the 411, the tax book, and the final cash flow statement from the Agency of Ed. Those three pieces, and I'm going to throw in the Form 427. Those are the pieces of the puzzle that you need to have to figure out this cash flow statement. Okay? So, is everybody okay with that process? Does that all make sense? Are there any questions? Yep.
So what if we didn't get all the money?
What do you mean?
I mean, Green Mountain got all the money too, they didn't have to give to anybody else, right?
Right, that's the check we have to write from the town. Now, I thought you were going in a different direction there. What I was thinking you were asking is, we mailed out tax bills, not everybody pays on time. But the Agency of Ed is saying fork over, what, 3,600,000 some odd
Yeah.
to the school. I haven't collected all 3,600,000 yet, right? Maybe I only have 3 million of the 3.6. We make the schools whole. They're going to get what they're supposed to get because they still have to pay their teachers and all that stuff. The thing that we get as a municipality, we get the 8% penalty and the interest
Eventually.
on the delinquencies, eventually. Yeah, we're taking the risk as the town, right?
Yeah.
The school's gonna get what the school's gonna get, no matter what. They're made whole. The town's just gonna wait a little bit for their money, but they're gonna get a little more, because they're gonna get penalty and interest hopefully at some point.
And that's that January true up.
Yep,
That's why we need
Yes.
the January 15th.
yep, so.
What did we pay you? What should we have paid you?
Right. And that, I'm glad you brought that up, Terry, because that's bringing it full circle. In August, we kind of did a preliminary of saying this is about what we think you're gonna have to give, but it's not gonna be exact. Because there might be errors and omissions, current use adjustments, homestead debt changes, appeals, but by January, we should be all done. That's why you send that final one up, and then they do a true up and say, well, you sent in out of the 3 million, 3,000,006, you sent in 2 million based off your estimate, so now you gotta make it whole. You gotta send in a million.
And it goes the other way around too.
Right.
If you paid too much, then you get it back in January. Or
Can I just ask a quick question? So what about litigation that carries on for like multiple years?
Good. So somebody takes you to court. And I think this happened, was it Williston not too long ago, Todd?
Burlington just finished that.
We did,
Okay.
South Burlington did the airport.
Yep. So the grandless season, as you remember from that first flow chart, ends December 31st. But that's with exception to State Board of Appeals in court cases. Now, you're referencing a court case, which may end up 3-4 years down the road. You don't know. And I believe this is where they just passed that legislation a few years ago, where this is what kind of caught some people, is they put somebody's appraisal up and said, hey, you owe us $5 million in education taxes. And then they could take you to court and you lose that case. And you lose $3 million on it. Okay? So the town had to pay back the property owner $3 million. Well, a portion of that is education tax. So the legislators made that law that said you can submit an application, say what the education tax, how much is, originally it was like $100,000 divided across the whole
The
state.
whole state.
Yeah.
But I think they bumped it up, didn't they?
They did bump it up.
So you
It's
can recover
54.10.
some of that, so you can recover that money.
5410, I think they changed it to $1 million.
Yeah.
That's what my brother chose for.
But you have to remember, you have to follow to the end of the route. You can't turn around and say, oh, okay, let's just settle. Once you settle, you lose it.
Right, right.
And it would have cost us
In a
something
lot of-
at that, up at that point, right?
Right.
And it
You
have
wouldn't
money.
recoup
Right,
anything.
right.
Yeah, and a lot of reasons that is people will go through the process, get to court, because until you get to court, you can't settle. Okay, so if municipality, in our case, municipality was Burlington and South Burlington over the airport. Now, there were some taxation laws that were changed and whatnot that didn't count for this, but there was a difference in the grand list. And when they come to, once they got to court, they could settle on where we're gonna end up. Versus going to court, have the court say, here's where you're gonna end up. And that's what Terry's talking about. If you do that settlement part, you're on your own there.
Yep.
Used to be that it was covered in some.
Okay.
It's called best practices.
It doesn't encourage settlement, though, does it?
It doesn't, but you weigh the consequence, you look, and sometimes there's some big dollars involved.
So that's a good question, Jacob, about that and how that ties in. And it does. It plays a role. So you wanna be cognitive of that if something's going to court and how to recoup those costs.
And you can look on the website, the tax website for, PVR 5410, or look up 5410, that'll tell you
Cases.
the process.